going forward. That's GM Golf Michael.
Excuse me. What's up, everybody? We're going to try to do this. The reason I don't go live during the day most of the time, as most of you well know, I have the worst internet in the world. So we're going to try to cover this. Turn the volume off on my phone. We're going to try to cover this. See how it goes. So what's going on? So this company right here, if
Coming up, the Fed rate decision in about 4 minutes.
If you've been watching the stock market, you know that this thing's been absolutely off the chain the last couple days. Had a massive spike all the way up to 76 bucks. Alright, so here we go. Let's show you what. This is why you don't trade this stuff, guys. This has absolutely no liquidity in it. You got ticks all the way up to $76. Had you got filled on that, when it opened back up, it was dropped back down all the way to 24 bucks. So, yeah. Let's see if we can do it like this. Where was that at? This one won't allow me to go that far deep. You can see more liquidity in it on Thinkorswim, but there's very little in it on the TradingView. So, with that being said, Fed minutes coming up in 4 minutes. Yeah, I didn't tweet it out. I didn't do anything because of that. I didn't alert nothing. I am dropping frames already, but it may hold it. It seems to be holding it. Once we get the Fed speak, I can drop TOS because that thing takes up a lot of bandwidth. Yeah, if I can stay on Brandon, I will absolutely pull up the commentary from the speech. I got Charlie from Benzinga Pro in the background. He's going to give us the numbers. And that's all we are waiting on. You can see on the SPX, the implied volatility for each week has been absolutely a lot bigger than it should be for the last few weeks, and you can see how price has basically been staying inside of the implied volatility. That's the weekly expected move. So if you buy out of the money calls or puts beyond there, your chances of making money are very, very slim to none. Last week, this thing didn't even move close to the outside bottom of the expected move or the top. And this week, you can see where your implied volatility expected move range is on this asset. 43.05 to the upside, 41.91 to the downside. That can also pull up the S&P or SPY, because I know most of you that are trading options are trading options on that instead.
Less than 1 minute to the Fed rate decision.
So here we go. What's up, everybody?
Fed discount rate on 0.1% the end of 2020, also 2021, 2022, 0.6% the end of 2023, 2.5% in the longer run. S&P futures are dropping here now, 41.90.25 the low. Fed says holds raises U.S. GDP forecast in 2021. Holds 2022 U.S. GDP forecast steady at 3.3%. Sees unemployment rate at 4.5% in 2021, 3.8%. Sees rates unchanged through 2021. Sees rates, 7 Fed officials sees rates increasing in 2022, 13 in 2023.
That's not my voice,
and the
Juice.
S&P futures now
That's Charlie from Benzinga,
dropping
bro.
here.
The squawk box from Benzinga.
4202.50.
Yep. So the market didn't like that. The S&P 500 did not like that at all. The dollar loved it. Euro's getting stomped. The yen threw a massive spike on CAD. Oil's not doing nothing. USD CAD. There you go. That's what we were looking for this morning. Long. You can send to see it hold. We did not hold.
IBRX Immunity Bio posted to clinical trials website study of
done with Charlie.
Zamamab with chemo immunotherapy to treat advanced triple-negative breast cancer after prior therapies.
Give me a minute. Let me get rid of
that
this
because
we're done with him.
That's India.
All right, so there you got right there. The dollar's experiencing a nice, big, massive move off of what it heard. They're not. I don't know. We'll have to see what Powell has to say. Let's go pull it up on my FX book. Let's go see what they got to say. It's a big spike. That's why you don't want to trade that stuff. I probably have to sign in to get the numbers, don't I? Let me pull it in up over here. Put this back on over there. Just keep on trucking, man. What's Pound doing? Getting slaughtered. I'm still short this from over here on this hourly push up. Friday, we had this move to the upside. I got short right there. Stop was just above the high of that bearish candle. I've been riding this out ever since. I am long on my other account from down here on the daily from a couple weeks ago, right before the Fed numbers, the jobs numbers came out right there, non-farm payrolls. So essentially what I'm doing with two accounts, being short on one and long on the other, is just hedging that risk off until I can see where this thing wants to go. Today and tomorrow is going to be very different or difficult to trade because you're not going to get an actual direction until the market chews it out to decide what it wants to do. Also, you're going to have a lot of firms taking new positions based on what the Fed Chair Powell says in the meeting. They're going to be basing positions for the next quarter off of that. You can see right here on the quarterly, you've got 14 days left. So essentially 2 weeks left on the second quarter 2021, and then we will bring in the third quarter 2021 on this FOMC rate decision. I'm trying to log in right now, but I can't remember my login. I haven't used this thing in so long. Let's see if it's this one to pull up the numbers. It sounded like they're going to keep it the same, no hike. Oh, I can't see it now that I logged in. Great. It won't let me go back. It's showing me the news as of now. Damn it. So the press conference is in 23 minutes. That's a pretty nasty move on everything. Let's pull up the S&P 500 again. So this right here is what I'm talking about. Big spike to the downside. Right here, this is taking out these lows, all the way into here. So basically this could be a buying opportunity because you have this 1 hour candle that has a massive range on it without any retests back into it. If I pull it over here, you can see how this wick essentially pushed down into the midpoint of this range expansion hourly candle. And now you see you are getting what looks to be a bit of buying pressure coming up off from that area. Now, in order for you to know if this thing is going to continue, you definitely got to get a 5-minute closure above this extended downrange candle. You got a 5-minute order block right there that will act as resistance. This thing has just essentially tested the midpoint range of this. So people will take positions on this trying to gamble. If you are doing that, stop it. You won't know what's going to happen until next week. Next week, we're going to take positions as new trends will start to form. They will start to show themselves. And in that scenario, that's when we absolutely... No, it's not the 1080p, Brandon. It's the megabytes per second upload speed and download speeds are terrible. They're not strong enough to maintain a steady stream. Someone told me to drop it to 720 the other day, and I did, and it still did nothing for the actual string strength. I still drop mad amounts of frames. I got the other thing ordered. It's just up to them to send it to me. I don't know how long it will be. It could be a little while. This is why I don't do many live streams, or try to avoid doing many live streams. But we shall go with it anyways. Let's see how much stuff we got out of the pound. All the way down to there and a dead stop. This level right here could be that quarterly level that we are watching. Let's go check it out. This is the level that I will be a buyer at, as long as it's not closing weeklies below it. You can see we are almost coming into it now. This is not massive amounts of selling. It's 3 weeks of downside. You've been basically trading choppy and sideways. You just stalled out at yesterday's low. So you could get a further push on into this. You could even get a push down all the way to take out this wick low here. If that were to happen, and then you would see dailies start closing back above 1.40129, which is this quarterly level, then you could probably get long looking for bullish entries. If they don't do anything, if the Fed does absolutely nothing, I don't see a whole lot of this stuff changing. If they do start talking about taper, then you're going to see a lot of stuff come off. The S&P 500 needed to come off. So as far as I'm concerned, this is a buying opportunity. If they're not going to taper, this is just pulling back for people to reinstitute new buying positions to push this thing on higher. You've been trading at all-time highs for the last, well, all this week, essentially. Last week, you put in a new all-time high wick. You've had continuation. So basically, you've just stopped everybody out from this point on. So you got to give it time to adjust. It's nothing bad. It's not as bad as I thought it was going to be. The dollar put in a move, that's for sure. That's a spike and a half. Good evening, everybody. What's happening? Afternoon. If you don't watch live, 1 minute behind. Yeah, I apologize for the lags, guys. I knew it was gonna lag. I just did the stream. I didn't even put it out on YouTube or Twitter or nothing. I just basically did it for the CTM people because they wanted some coverage of the FOMC meeting. I'm going to look for a link for that now. Let me go over here. Where is the chat? Let's go see where the chat is. Let me get somebody in there. Let's see if somebody can throw me a link in the Discord. So let me get over here. Back to this. F in the chat for my shorts on Mexican USD. Let's go look at Mexican USD. Yeah. And he's getting crushed. USD Mexican peso. I'm sorry, man. I got smoked on a pound yen trade this morning. I was trying to do it live and I ended up... Yep, it looks like you got stopped out. So I got the link. Thanks to John in the Forex part of the Discord. Thank you, my friend. What's up, Tom? What's up, everybody? Evening, Heath and Team Trade Talk. What's happening, Michelle? Gene, Juice, all you guys. Thank you guys for showing up. It's fantastic. Let me pull this up over here. We don't want no music, not yet. So let me... Where's the... I'm just reading the chat, guys. Give me one moment. Is Ian Randall part of your family, Michelle Randall? Family Randall. Let's happen. Prescriptions in. So I do have the link to it. And yes, you are getting crushed if you are short USD Mexican peso. Remember in the live stream, man, I said this down here was a massive low. A massive low. You got to be careful going short into those things because that's support. Right, you got a few more days down there. Hopefully you took profits down in here. But it's just been going up for like several days. That dollar was bound to catch a bid. We've been looking for dollar strength, guys. That's why I was looking for USD CAD longs this morning. It just did not go my way. You can see here, these were the levels that I was watching here this morning. This 5-minute tested level and this 5-minute untested level. We got breaches all the way through there. This is your daily support. You even got a massive push down into that. Choppy sideways action. So all FOMO traders that are shorting this thing today, thinking that they're killing it ahead of the FOMC minutes, they got stomped, right? They got massively slaughtered. This was just giving liquidity to the actual move that was inbound. There it is. You have taken out targets. Next check of resistance on the 8 hour, all the way up here, 1.22664. Let's get rid of these levels as they are no good anymore. Let's go look at this. I do have this going on today. Everybody was looking long on this, not me. I did get long yesterday ahead of that target, took the target right here, boom, took profits at that target, and then once you fell back beneath this, all of this stuff got crushed. Traded sideways yesterday about 2 hours before the market closed, took a short position on this and real account, boom, all day long, just straight down. It's fantastic, right? Fantastic. Haven't taken profits yet as I was looking for this level. If it starts to move up, I will exit the position, or at least the bulk of the position. I'm thinking AMC's done. Dunzos. We will see, though. We will see. It's still stretched out pretty big to the upside. But when you have a spike up like this, you get all those premium buyers buying calls, $72, 60, $76, $80 calls, thinking that it's going to make another candle like this. They get crushed. They get crushed. All this is a push lower. This is your basic top. This move back up is just to test any inefficiencies that were left up here, and then you get the real move to the downside. This is why it's imperative. This is why I take profits when I am targeting for those levels. So essentially all I was targeting was this daily high wick and this daily high wick yesterday. Once we got that, I exited that position completely. Then yesterday evening, once we pushed down right here on the hourly, once we got this break lower, this is when I got short. My short position is at $60.30. So that's working. Pound short's working, but my pound long's getting crushed. But that's all right. Look, we're coming into that level right now. We got 10 minutes left until we get the actual stuff, the press conference. And I'm pretty sure it's just music. Yeah, just music. That's all it's going to be for a minute. $39,495 short Bitcoin, no stops on FOMC. I would have been stopped out by now if I had one. Yep. Heath, the gold USD price targeted you set has just been hit. All right, so if they don't do anything, we'll have to see what goes on. Let's go look at it right now. See, this is the thing. Yes, the level's hit. So this is beautiful. Let's go to the daily, pull it out there. There's your daily resistance, old resistance. Now to see if it turns into support, you don't just blindly buy these levels. And I've made that very clear in many videos. You don't just blindly set a limit buy order there. You must first wait to see what kind of reaction you get on the level. All right, you can go watch 4-hour bars, 1-hour bars. what you need to start seeing is price closing above that level. And then you may get some sideways price action here for a little while. Once you start seeing higher highs, then on a push lower, that would be your entry. And then you would obviously throw your stop under the lowest wick, whenever that may be. Will price just shoot out of here? It's highly unlikely. This was a massive move today. So a lot of this stuff is going to be retraced, right? But we just have to wait because the dollar is absolutely on a tear. Let me just type it in. It is on a rampage right now. And it is still going. You've taken out all these highs on this push. The dollar is bearish. This push up can be an opportunity, but it needs to find resistance. Because longer term, it is bearish, right? You start taking out swing highs to the upside on a daily, then you got something else going on. I can get it all the way up here. I still like it short all the way up there. I won't take it blind short on the dollar up there, depending on what Powell says today. But if price trades up there, then you could probably get long targeting these wicks first. And if that happens, then you get a rejection. That's when you want to look for your short setups, for trending moves, for short side continuation on the dollar. What is Bitcoin doing? There we go. This is what I was talking about. This is where I want to look to be a buyer on Bitcoin. So this original first move is putting everything, situating it absolutely perfect for us if we are looking to short the dollar or buy Bitcoin or buy euro or pound, right? This move, this first initial move is generally, you don't want to take this as your position. This is not what we're looking for. Did we get a test of that level? It looks like we did just now. Got a test of that level. And now you are, let's see, go back to the daily. Perfect touch of it. Almost perfect. And you see what kind of reaction you're getting from it. It's to be expected. This is the buying opportunity. If this is going to be a buying opportunity, it's down here around this level. The trends will continue if they don't do anything. Like if they keep everything jacked up on crack the way that they've been doing it for the last so long, you are going to absolutely see these trends continue. You're going to see more bullishness out of the S&P 500, out of the NASDAQ. You're going to see all of that stuff. You're going to see euro dollar, Aussie dollar, pound dollar, all that stuff's going to get bullish again. Everything's just going to be bullish like it was. This move is just to shake people out, right? That's all this is. It's a shakeout move. Get everybody short. And then in the next few days, get a big bullish push up out of here. And I am positioned for that on the pound dollar. I am positioned for that. I am long from the last non-farm payroll. Not the last non-farm payrolls, not June's non-farm payroll. It was May's non-farm payroll. Here, this is when I got long. My target was these areas. I gotta find them on the daily. This wick right here was my target. So when I got long, it was here, sorry. I got long ahead of NFP targeting this wick up here. So on that break, 2/3 of the position off, stops up to break even. But this is the level. This is that quarterly level. If everything's going to continue bullishly, you got a nice rounded top up here. So retail did short it. I got short on my other account, right? That provides liquidity for a bullish push later, as everybody's going to be looking for bearish continuation. But if they do talk about tapering, then you will see more bearish continuation. until the Fed comes back and says, oh, we were just kidding. When we said tapering, we meant more injection of stimulus. That's what we meant. Yeah. It's going to be fantastic. Welcome, John H. Can Bitcoin bounce up after FOMC? Absolutely. If people buy it, it will. If people don't buy it, it won't. You got to have buyers. Gots to have buyers. 4 more minutes. But look at that. What a flawless test of that level. It's so fantastic when stuff works out. Technical analysis isn't the end all be all. I can tell you that. But it does give you valid areas to look for possible trade entries. All right? Well, where are we at on the S&P 500? Yeah, big push. Got below all those spikes. So now we can head higher. We have cleared out the liquidity. We have taken out any insufficiencies or whatever you want to call them. You can move higher now. Will you? I don't know, obviously, but if it's going to, now is the time to do it. Let's go ahead and add gold onto this chart over here. This way, it's just easier for me to keep track of all this stuff. So everything's pulling back into valid levels. Everything is. Levels that if you've been following this channel, you have already known about them. Now you're getting a bigger push on Bitcoin. All the way, no, it's the same one. This isn't even the level. This is the level that I like better. Get it pushed down to here. Maybe be a good spot to look for buying opportunities. You could technically trade all the way down into here, 35,905, and still be good in my book. You take out this bearish candle's closing price, then this will just have been a bull trap. I don't think that your bull trap is going to come this shallow. I think Bitcoin's going to go much higher. If Bitcoin's going to sell off, I think it's going to sell off from a much higher place. I just can't see it selling off from here. Can it sell off from here? Absolutely it can. I'm not saying that. I'm just saying if it was me and I was looking for a short setup on Bitcoin, I need it higher. Because I would be looking to ride the short setup for a long while to the downside. All of this chop is mainly because it's what you see on everything else. Look at the pound dollar. Look at all this chop. You're at quarterly open ranges. Euro dollar. You've taken out the low side of that, whatever that is, which is typically looked at as a bearish scenario. So any retests back up into this level here, is that an hourly level? It's got to be an hourly level or it doesn't count. It's not. It's just a wick. So, yeah, you could trade up into there. If you get a rejection, you're heading lower. This is just a small breakdown. 1 minute. You know if y'all can hear that. Ooh, it's bad. You can do it.
Good afternoon. At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, the Federal Open Market Committee kept interest rates near zero and maintained our asset
Kept
purchases.
interest rates near zero.
These measures, along with our strong guidance on interest rates and on our balance sheet, will ensure that monetary policy will continue to deliver powerful support to the economy until the
That's
recovery
bullish.
is complete. Widespread vaccinations, along with unprecedented fiscal policy actions, are also providing strong support to the recovery.
No.
Indicators of economic activity and employment have continued to strengthen, and real GDP this year appears to be on track to post its fastest rate of increase in decades. Much of this rapid growth reflects the continued bounce back in activity from depressed levels.
I am not Jordan,
The
Dave
sectors
Griffin.
most
I am
adversely
Heath.
affected by the pandemic remain weak,
I don't know if you're
but have
actually
shown
talking to
improvement.
Jordan or not. I don't see him in the
Household
chat.
spending is rising at a rapid pace,
Oh, there he is.
boosted by the ongoing reopening of the economy, fiscal support, and accommodative financial conditions. The housing sector is strong, and business investment is increasing at a solid pace. In some industries, near-term supply constraints are restraining activity. Forecasts from FOMC participants for economic growth this year have been revised up since our March summary of economic projections. Even so, the recovery is incomplete, and risks to the economic outlook remain. As with overall economic activity,
His mic
conditions
is
in the
screwed
labor
up.
market
That's
have
not me,
continued
that's
to
him.
improve, although the pace of improvement has been uneven. Employment rose 419,000 per month on average in April and May, with the leisure and hospitality sector continuing to post notable gains. Employment in this sector and the economy as a whole remains well below pre-pandemic levels. The unemployment rate remained elevated in May at 5.8%, and this figure understates the shortfall in employment, particularly as participation in the labor market has not moved up from the low rates that have prevailed for most of the past year. Factors related to the pandemic, such as caregiving needs, ongoing fears of the virus, and unemployment insurance payments, appear to be weighing on employment growth. These factors should wane in coming months against a backdrop of rising vaccinations, leading to more rapid gains in employment. Looking ahead, FOMC participants project the labor market to continue to improve, with the median projection for the unemployment rate standing at 4.5% at the end of this year and declining to 3.5% by the end of 2023. The economic downturn has not fallen equally on all Americans, and those least able to shoulder the burden have been hardest hit. In particular, despite progress, joblessness continues to fall disproportionately on lower wage workers in the service sector and on African Americans and Hispanics. Inflation has increased notably in recent months. The 12-month change in PCE prices was 3.6% in April and will likely remain elevated in coming months before moderating. Part of the increase reflects the very low readings from early in the pandemic falling out of the calculation, as well as the pass-through of past increases in oil prices to consumer
Or says
energy
transitory.
prices.
Conquering the
Beyond these
markets.
effects, we are also seeing
He says
upward pressure
transitory,
on prices
you get a
from the
drink.
rebound in spending as the economy continues to reopen, particularly as supply bottlenecks have limited how quickly production in some sectors can respond in the near term. These bottleneck effects have been larger than anticipated, and FOMC participants have revised up their projections for inflation, notably for this year. As these transitory supply effects abate, inflation is expected to drop back toward our longer-run goal, and the median inflation projection falls from 3.4% this year to 2.1% next year and 2.2% in 2023. The process of reopening the economy is unprecedented, as was the shutdown at the onset of the pandemic. As the reopening continues, shifts in demand can be large and rapid, and bottlenecks, hiring difficulties, and other constraints could continue to limit how quickly supply can adjust, raising the possibility that inflation could turn out to be higher and more persistent than we expect. Our new framework for monetary policy emphasizes the importance of having well-anchored inflation expectations, both to foster price stability and to enhance our ability to promote our broad-based and inclusive maximum employment goal. Indicators of longer-term inflation expectations have generally reversed the declines seen earlier in the pandemic and have moved into a range that appears broadly consistent with our longer-run inflation goal of 2%. If we saw signs that the path of inflation or longer-term inflation expectations were moving materially and persistently beyond levels consistent with our goal, we'd be prepared to adjust the stance of monetary policy. The pandemic continues to pose risks to the economic outlook. Progress on vaccinations has limited the spread of COVID-19 and will likely continue to reduce the effects of the public health crisis on the economy. However, the pace of vaccinations has slowed, and new strains of the virus remain a risk. Continued progress on vaccinations will support a return to more normal economic conditions. The Fed's policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people, along with our responsibilities to promote the stability of the financial system. As the committee reiterated in today's policy statement, with inflation having run persistently below 2%, we will aim to achieve inflation moderately above 2% for some time so that inflation averages 2% over time, and longer-term inflation expectations remain well anchored at 2%. We expect to maintain an accommodative stance of monetary policy until these employment and inflation outcomes are achieved. With regard to interest rates, we continue to expect that it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate until labor market conditions have reached levels consistent with the committee's assessment of maximum employment, and inflation has risen to 2% and is on track to moderately exceed 2% for some time. As is evident in the SEP, many participants forecast that these favorable economic conditions will be met somewhat sooner than previously projected. The median projection for the appropriate level of the federal funds rate now lies above the effective lower bound in 2023. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a couple of years from now. More important than any forecast is the fact that whenever liftoff comes, policy will remain highly accommodative. Reaching the conditions for liftoff will mainly signal that the recovery is strong and no longer requires holding rates near zero. In addition, we are continuing to increase our holdings of Treasury securities by at least $80 billion per month, and of agency mortgage-backed securities by at least $40 billion per month, until substantial further progress has been made toward our maximum employment and price stability goals. The increase in our balance sheet since March 2020 has materially eased financial conditions and is providing substantial support to the economy. At our meeting that concluded earlier today, the committee had a discussion on the progress made toward our goals since the committee adopted its asset purchase guidance last December. While reaching the standard of substantial further progress is still a ways off, participants expect that progress will continue. In coming meetings, the committee will continue to assess the economy's progress toward our goals. As we have said, we will provide advance notice before announcing any decision to make changes to our purchases. On a final note, we made a technical adjustment today to the Federal Reserve's administered rates.
Yep.
The IOER and overnight RRP rates were adjusted upward by 5 basis points in order to keep the federal funds rate well within the target range and to support smooth functioning in money markets. This technical adjustment has no bearing on the appropriate path for the federal funds rate or stance of monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to support the economy for as long as it takes to complete the recovery.
There's your daily support.
Thank you. I look forward to your questions.
Mr. Chair.
I don't know if you guys want to listen to the questions. He said basically everything.
Thank you, Michelle, and thank you, Chair Powell, for taking questions. I'm wondering if you can walk us through expectations.
In terms of exactly what that means,
this is your quarterly
we'll have to see
level
how
here.
things evolve. I think we learned
This is your last bearish wick through it. This would be an area
history
push
that labor
lower
supply during a long
bearish
expansion
targets.
can exceed expectations,
We
can
will
move
see.
above its estimated trend, and I have no reason to think that that won't happen again. At the same time, we have seen, in terms of participation, we've seen a significant number of people retire, and so we don't actually know exactly what labor force participation will be as we go forward, but I would tend to look at it and think that it can return.
So it sounds like they're not going to do anything to me Ace, is that's what you're asking? It sounds like they're gonna leave everything the same. They're gonna still stay on they're gonna stay on course with their asset purchasing plans. He said that. He said that they would let everybody know if they are going to make a change in monetary policy. They wouldn't just spring it out on us on a meeting like this. So essentially, from what I've gathered, he's not going to do anything. So basically what we can look for is we can look for bullish targets on some of these assets coming up if we hold supports. We got daily support levels. I will get everything up tomorrow morning. I will go live again and I will have all these levels situated for everybody so that way they can watch the gold level. Let's see how the day closes. This isn't the same chart. Sorry. Let's see how the day closes on this level right here. We've been waiting on this level on gold, 1837 spot 48 for weeks and weeks. We've been waiting for this ever since price was doing all of this up here. I told everybody to wait till we get a retest of this level. As long as you keep closing daily candles above it, then in my opinion, you could probably see something like that. Now, I'm not exactly sure how that's going to affect gold if everything stays the same. They are probably still not buying the inflation speak. So gold is an inflation hedge. Bitcoin, somewhat of an inflation hedge. So I'm assuming, I could be wrong, but I am assuming that we will see some bullish reactions from gold, Bitcoin. After today, tomorrow, the rest of the week can remain bearish. Next week, we will see what we got going on. We'll go from there.
To high levels, although it may take some time to do that.
I'm
But
pretty
overall,
sure
this
he's
is,
done.
This is going to be a very strong labor market. In terms of the near term, you ask as well. So we see a few things that seem likely to be holding back labor supply. There are very large amounts of job openings, and there are a very large number of people who are unemployed. And the pace of filling those jobs is somehow feels slower than it might be. So I point to a number of things. The first of which is just that most of the act of sort of going back to one's old job, that's kind of already happened. So this is a question of people finding a new job. And that's just a process that takes longer. There may be something of a speed limit on it. You've got to find a job where your skills match what the employer wants. It's got to be in the right area. There's just a lot that goes into the function of finding a job. So that's sort of a natural thing. In addition, I would say that we look at, for example, a significant number of people still say that they're concerned about going back to work in jobs where there's a lot of public facing because of as vaccinations move ahead. There's also the question of childcare. Many are engaged in caretaking, and as schools reopen and childcare daycare centers open in the fall, or not in the fall, then we should see that supporting labor force participation by caretakers. Finally, unemployment insurance for something like 15 million people will either end or be diminished as we move through the summer and into the fall by the end of September. And I'd like some that may also encourage some to go back in and take jobs. So you would think that would add to an increase in job creation as well. So you put all those together, I would expect that we would see strong job creation building up over the summer and going into the fall. I will also say, though, the last thing I'll say is this is an extraordinarily unusual time, and we really don't have a template or
All right, so everything is dropping off pretty bad at this point. I think I'll just close that out, as we don't need to listen to him. Plus, that thing will be it'll be all over the news for the next week or so. Euro's still falling. Euro is not catching any support at all. At all. Just taking a beating. Falling down out of there. 10-year is up. Like someone said, it is up big. Nice big push off of that support. We had 8-hour support down here. Let's go see if it marked up with daily. Nope, it's just 8-hour support. Wait a minute. It's the exact same level, but that's the bearish opening price is what counts, not the wick. Yep. Found support. You're bouncing. This thing though has been bullish. Sideways, come down in here, take out this wick low. Now you're moving back to the upside. Resistance, possible resistance on the TNX is going to be 1.601. So you're coming into that now. You get that, you get a pullback. As long as on the pullback you find an area of support, it may be catching a bid. Like I said, don't get too caught up in the reactions that you're seeing today, for the simple fact that a lot of this stuff can turn around. You got a massive bid on the dollar right now, but if the dollar is going to continue lower for the next quarter because of what the Fed chair just said, these are fantastic areas to look for short size positions, looking for trend continuation, and finally take out those lows down there that have been holding all 2021, right? And into last 2020, got this low down here. So here's your quarterly chart on your DXY. So you're getting this pullback now because no one wants to short the lows, right? No firm, no hedge fund lows into quarter happen. And then it's also semi-double bottom-ish, I guess you could say. So basically, we're just going to give it days, a few days to chew this up. Trading above 3-day resistance right now, right there. Daily, you've got plenty of room on the daily to move higher. I've got daily resistance situated at 91.297. So this will be a area to watch. As long as we are not closing dailies above that price, we can possibly look for short side setups. But that's only if you get a daily closure above there, man, you're going higher. And for some reason they're not buying it. Not buying it at all. I am dropping a ton of frames. Everything we do is in public interest. Yes, of course it is. There are a ton of restaurants still struggling. Kimberly, you are absolutely correct on that. And as long as they print money like that, yeah. Chase, this isn't no news. If they want to maintain 2% inflation, they need to do something to regain 10% plus real inflation that is inevitable of the next 4 years. I'm just checking out the comments. You are welcome, Giles. Thank you for being here. VXX calls. Oh, man. Let's go look at the VIX first, and then we'll pull up the VXX. Getting a bounce. The time to buy VIX calls would have been down here, right? Because just the fact that the VIX goes up increases the implied volatility. So technically, you don't even have to be right on your strike. You can just simply own the calls. And with the volatility expanding, those calls will inherently become richer, right? But as well, if you did get that as with a push in price, obviously, then yeah, you could see something. VXX is the volatility of the volatility index. I don't know if we can pull it up here. There it is. So this thing, it just continues straight down. So basically, they just keep reverse splitting it, reverse splitting it, reverse splitting it. If I'm going to trade calls and puts, I would much rather just play them on the VIX itself. That's where implied volatility is calculated from, this asset right here, the VIX. This is where implied volatility gets calculated from. The option model that calculates the price of the Greeks is generated from this asset, the VXX. Like I said, I mean, you may be able to find cheaper calls, but are you looking to buy calls up here now? You did get a break of resistance, but obviously this thing does not trade like regular assets. I mean, it does. You can trade it. You absolutely can. You can buy calls and puts on it for sure. But it just, there's not really support and resistance levels. So this would have been a support level. Boom, boom. 2 days closed below. Now you're back out of it. So the time to buy VIX calls, in my opinion, was a retest of the level. So this morning, right? But you still would have paid a little bit more for the calls as you had 2 green days. So the implied volatility was up a little bit. But are you going to see massive gains on the VIX? I do not think so. I think you might get a little push, but then just as soon as they realize that the Fed is going to keep printing money and they're going to keep doing asset purchasing, the S&P 500 is going to turn around. So if anything, I might be looking to buy puts on the VX, VIX, VXX, or whatever you're trading. Not today, not tomorrow. I would be waiting a little bit because this thing this is a long-term low on this asset, right? So here's March into February when the liquidity crisis came in right here. So up until that time, the markets have been trading terribly low as far as implied volatility. And see, you still have not gotten back down to those levels yet. Those are your normal levels. Anything from 13 and lower is a normal VIX. Anything over that isn't still normal. And it hasn't been normal since the liquidity crisis back in March of last year. Of that, it has been getting crushed though. 100 and all those assets. So this will be a buying opportunity more than likely. Maybe not today. Maybe tomorrow. Maybe the next day. You're pushing into support right now. Then if you get a daily closure, which is going to be here in an hour or so below that, you can look for a push and test of 41.92. This is your actual support. This is just an order block level, right? It's just something for bullish continuation. If you're going to get it, that's a good spot to look. Let's go back into the smaller time frame charts and see what's going on. Anytime now. So you got a lower push, lower close. Nothing bullish yet. Nothing bullish yet. You got to start getting above your resistance candles, your 5-minute bullish candles. You got to start seeing 5-minute closes above those levels. And then, like I said, this is going to be an area where people are going to assume this is going to keep rolling over. They're going to look to get short right there. So if you get a big push from this area, might be a good area to look for bullish entries. But this wick is going to be terribly long. You would almost have to get your stops all the way down there. And that's a massive push. Almost a whole % by itself on the move. What is it? $33. A $33 move to the downside on the S&P 500. You don't trade today. You don't trade tomorrow. You let this stuff situate. You may see more downside, like I said. Look at that. Been looking for bullish entries on this thing for a month, and I just have not been able to get any of them. And there you go. Daily resistance right above. So we shall see what happens. 110, 617. Get a test of that. If you come back in and test 110, you want to see a daily closure below that to validate this up here as resistance. If it's going to continue lower. I don't know that it will continue lower. Let's go look at the Japanese yen index, because you could just be getting weak. Oh, that's not it. You can just be getting weak Japanese yen. You are definitely getting strong dollar today, and you are getting weak Japanese yen. There you go. There's your daily right there. Taking out daily support so far. That's... Yep. Yeah. What did the Swissy do today? I haven't looked at the Swissy. I was looking at it earlier. Let's look at Aussie Swiss first. There's your daily. It's just been doing nothing but sideways. Yesterday you got a daily close below support. This was support. Today you came back in, tested. What did you test? the opening price of your prior day's bullish candle almost flawlessly. And then rejection. Boom, straight down. Aussie yen. I am short this asset. I got short this asset yesterday. I will show you where. Right here. In this push here is where my short position is on this thing. So that position's doing good. I need to manage that position actually and take some profits off of it soon. Can you get a push lower? You can, but you are breaking this ascending trend line. This is another thing though. This is the reason why I was looking for bearish entries on the Aussie yen, because you are making this ascending wedge. Ascending wedges are looked at typically as a bearish pattern, because if you get your daily breakout below there on a retest of daily support or old support, should turn into resistance. But you can get a wick all the way up to the opening price of today's candle. If you reject from there and you get back under this trend line as well as your resistance, you can look to get short again, looking for downside continuation. And your next area of resistance is all the way down here. Once you take out this wick low, you could probably get another push down to 83.773. These are going to be bearish targets, right? That's if this pattern holds. If you trade back up inside of this pattern with a daily closing candle, this was nothing more than a bear trap, and you can look for bullish price action. This is why I'm saying you don't have to rush any of these positions today or tomorrow or even Friday for that matter, because the real trend is going to reveal itself probably next week or the week after, and then we can look for setups, because then we'll know, well, this was a bear trap, so now we know we're looking for bullish entries. If you do get a retest of this level and a fail, and you take out this daily range in the next day or two, then we know this asset at least is going to continue lower. But you're getting a massive push versus the Aussie yen, and the yen is extremely weak today. Extremely weak. So this kind of move shouldn't be happening. This is straight up Aussie weakness that you're looking at. That's all you're looking at. Aussie weakness. Not so much on this one. There it is. Push on the dollar. So let's go look back at CAD yen. See, that ain't nothing. CAD yen did nothing today. It came into support, testing it, and you still haven't got a daily closure below daily support. So now this level comes down here. See where CAD yen closes today at 5 o'clock Eastern Standard Time. Where does this candle close? You close back above 90.212. Tomorrow, you could see a push down into possible 90.029. Look for bullish entries targeting first area of resistance, which would be 90.626. USD JPY has already made its move. If it's going to continue to be bullish, you are going to have to wait on a retest and a find of support. First area, 110.074. You are looking for that resistance right now, it looks like. Can you hit it today? You already put in a pretty massive range, but it ain't nothing compared to this range. So yes, you can hit that today. Absolutely you can. Would I take a short right there? No. Why not? If it's resistance, because you got a lot of bullish momentum coming into there. Just like you don't buy falling knives, you also do not get in the front of a train when it's rolling down the tracks. Yes, I was right on Aussie yen. Yeah, that's why I went short. If you want to own land, study, or open a small business, inflation not 4%. Just got my take profit position on USD CAD. Nice top dog killer. Fantastic. BTC has no huge reaction. No, it does not. So we could look for BTC to possibly find support. That's what we're looking for on Bitcoin. You did have a bullish breakout. Yes, you haven't done anything for the last few days, but you need support if this bullish breakout move is going to continue. You don't just go straight up. You go up for a couple of days. You have a couple of days of consolidation. When you find support, can you find support up here? Yep, you sure can. This thing closes at 8 p.m. See where it closes. You close above that. This is resistance, but if this closes above 39,219, I would be looking for this to get broke within the next day or two, and you could be looking for 4,200 or 42,000. I don't know why that level's there. Never mind. That's an old level. That does not matter. If you get a push up out of here, your first target's going to be this bearish candle's wick. That would be your first bullish target. That's where you would look to take profits. 42,297, spot 89. Oil's coming off now. Now oil's coming off. It wasn't doing anything at the beginning. Now it's coming off. So that's weakness on CAD. Well, actually it did. It moved just as strong. Oh, this ain't oil. That's why. There we go. So yeah, oil isn't doing anything from this news. You're just getting a standard pullback. Now, this could be a near-term top for oil, right? Pushed up, took out all the liquidity up above that, and then you got a bearish push to the downside. This is a 2-hour chart. There's your bearish close. You close below 2-hour support. Here's your retest into 2-hour support, and you're getting follow-through. Next area to look for is going to be 71.66 on oil. Anything lower, you're going to be watching 71.17. These are your next two areas of possible support on oil. I don't know how oil will be impacted. They definitely needed a pullback on oil. It's been going straight up. There's your daily. See, even on the daily, even if you do get a push down into those two areas of support, you're still up in an uptrend. You're still fantastically holding. You're still moving higher. But those are two areas of possible support that may be found intraday. As the 2-hour time frame is an intraday chart. Euro USD, is it getting a bid? No, it is not. Euro USD looks like it wants continuation to the downside. Here is your first Heath level. You tested it already. Daily closure above it. Today at 5 p.m. Be a good area, or not a good area. Just keep an eye on it. Basically what I mean. Because that is going to hold as support possibly. You get a daily close below it. Your next level to target would be down here at 1.19785. That's if you get a closure below this level. If you stay closing daily candle above it, 1.20143, you're probably going to get a bullish push to at least this wick low, right? To at least there. As all of this price action will be retested at one point or another. When can you start looking for bullish entries back on this thing? As soon as you get a daily closure above daily resistance. Last area of daily resistance is this bullish candle, 121268. Daily closure above that. I will be looking for retest areas, looking for long positions, right? Because this thing has been in an uptrend, testing pretty low. This thing came off a lot more than the pound did. There's that quarterly level. That quarterly level is going to be a big level on the pound. That's quarterly resistance right there. You can see how it held price down all back through here till non-farm payrolls. You got a big bullish break, came in for a retest. So this is what I want to say to people on the internet that claim that support and resistance don't work. It works. Like, there you go. That was resistance. You broke out. You came back in for a retest. You moved higher. If you're trading liquidity and stuff like that and the interbank levels and all this stuff and you think that that's the real way to trade, you can trade that way, but there's not just one way. This stuff works because it's price action. It's how it has to work. You're coming back in for a retest now. If this bullish continuation is going to happen, it's probably going to happen from this area. You start getting daily closures below that level, then guess what? We can look for rejections on the pound. We can look lower, right? But we know we're bullish above this level. We know we may be bearish below it on the pound. Euro's getting crushed. What do y'all want to look at? Bitcoin isn't doing absolutely anything. S&P 500 is already catching a bid. Already catching a bid. Oh, there you go. 5-minute close above this. You're coming here. 42.31 spot 40. Let me check my AMC position, please. Still holding strong. Looking good. Back to the S&P 500. I mean, still holding weak. It's definitely not strong. See how these levels work? You get tests. This is essentially a bear trap on a 5-minute time frame. Like, these candles are fractals, so it all does the same thing. Rudy Rados 13,843, perfect. The second trend line from Jordan. Learning a lot, says P. Thank you. I'm glad you're here. Watching from India. Welcome. I cannot pronounce your name, Prabhav. S&P will close red or green. It'll probably close red. You got to go all the way up to 42, 46, 40 to get a green close. It'll probably close red. You've got 52 minutes left on this candle. So you would have to get all the way back up to 42, 46 to close green. It's probably going to close red, but that doesn't mean anything. That's an 8-hour level up there. No, it's nothing. What is going on with these things? So that's 8-hour support. It's your last support candle. You're already trading back above it. Back above it. This asset, S&P 500, SPX 500 USD, this is a CFD. This thing trades 24 hours a day. See you later, Shile. Nice to meet you. Volatility 75 index. I don't know what that is. Let me type it in. I don't know what you're talking about. Volatility 75 index. I don't know what that is. Tamsin, if you could give me the ticker, that would be fantastic. I mean, if you're talking about just the VIX, I can look at it again. I've already looked at it a couple times. How often is FOMC? I know for a fact it happens every quarter. I don't think it happens every month. They're not that important usually. Today was important because a lot of people thought that they were going to taper. There was I seen one poll that said 60% of investors thought that they were going to taper. So you were seeing people position for the short side for a taper tantrum. If you would have gotten a taper tantrum, you would have been looking for short side setups on a lot of these assets. But since they're not going to do anything, they're going to continue their asset purchasing. They're going to continue basically puffing up this market. So, like I said, anything to the downside, if they're going to continue to do that, is going to be looked at as a buying opportunity. Do you buy now, today? No, you do not. Because tomorrow you can get continuation to retest these levels to see if they want to hold as support. Because if they don't, then they will leave those areas. So you did not get a test of resistance on the USD JPY yet. Pound is getting a bid up off that level. Not a massive one yet. But it looks like they are getting exhausted of sellers. So this is a big range also. Like I said, I hold this thing long on one account, short on the other. So this position is absolutely hedged. I will remove the short position if we get above today's open. If we get a daily closure above 1 spot 40.08 or 1 spot 40.800, close to this level here, today's opening price, I get a daily closure below that or above that, I will exit the short position, as this is the area to buy long. I am long from down here before NFP in May. So I got short up here, looking to hedge off some of that risk to the downside, because I also knew this meeting was coming up today. So I essentially just wanted to hedge out that position, because if we're going to get a bullish push, like I've been saying for weeks and weeks on this asset, here is your quarterly chart. This is the first time you've ever traded or gotten above this trend line right here. Now this is on normal scale, but if you put it on log, you can see how it is. So nevertheless, no matter what it wants to do, if you get a bullish push out of here with a quarterly continuation to the upside, you're going to get probably a nice trade out of this. Like you could see 148, 150, 155 by the end of the year is what I'm saying. This is a massive trade, right? You are looking at a possible big opportunity on the pound right now. If you do get that rejection back below that quarterly level, that resistance level on a weekly closing basis, then you can look for short side setups as the trend is probably going to continue. And either way, you're going to be at a good spot to position for the next quarter and the quarter after that. For the rest of 2021, it is at a very pivotal area. That's why you got massive chop for the last couple weeks up here, right? So we will see where we are on this thing. Either way, it's in a pretty decent area for either long-term short side sets or long-term bullish setups, looking for higher prices on the pound. Don't worry about them if they spam, Wes. You smash them with the band hammer like as always. Steve didn't mean to hide you. Lag spike in the chat. I'm sure they understand, Wes. You are a fantastic individual. Never mind the man behind the curtain. It's just inflation. That's funny. Yes, look at ETH would be good if you have not done it yet. I have not done it yet. I will go take a look at it. I am so sorry. ETH, I have left you behind. I got a lot of positions on right now, and none of them include ETH except for I got long-term hodls in ETH, but no near-term positions. See, ETH looks worse than Bitcoin. That was ETH's bullish push. That's nothing. That's terrible. It got halted at daily resistance. And then you traded above it and you closed red on the day. This is your continuation. This is your trending candle right now. There are no levels on the daily for you to get on ETH. So essentially what it's doing is it's testing this bullish candle's open. Because these are the 4 data points that are important to a trader, to a day trader. Open, high, low, and close. That is it. Those are your most important data points. Always. Your high, low, open, and close. So this is your bullish range expansion. This is your bullish day. There is no level in this because it was one day. You're testing the opening price of this bullish candle to see if buyers want to step back up again or not. You get a daily closure below this bearish candle's close, as that is your support. You're going to be testing this support again. And if you do that, it's not looking good for ETH, unfortunately. But that's neither here nor there, as this could be a buying opportunity. Let's go look on an 8-hour time frame, see if we can get some levels. Look at that. You're testing an 8-hour demand zone. Not quite, but you did test this bullish candle's close. Did not quite get it in there. What did you do? What did you test? You tested this wick high. This looks good for ETH. As long as you can stay closing 8-hour candles above this bullish candle's opening price. So let's just say this bearish candle right here. You see an 8-hour closure below 2371 spot 85, you're looking lower. As long as you're closing bullish candles above it, you're looking higher. This, from this candle range right here, left a bunch of untested price levels. Those levels are just being tested right now. This can still be bullish. This range candle got tested. You tested this breakout range candle here. Midpoint of it, roughly. Right? So now you've gotten that test out of the way. All of any inefficiencies left in this price leg to the upside have been removed. So how do you trade that? Well, here's going to be your first hourly area of resistance. You get an hourly closure above that. Just since it's such a small range hourly candle, just use the closing price of that bullish candle. You can see it's already been tested once. So you get an hourly closure above that. Next area to look for resistance will be up here, at least. So you get an hourly closure above here, spike up to there. You come back in down here, you look for bullish opportunities. You look for support to hold. This is not financial advice. If that's what happens, then you are looking for higher prices on ETH. All these inefficiencies gone, so price can move forward now. This is a buying opportunity possibly. Let's go look at Bitcoin. See, Bitcoin still has inefficiencies in my opinion. Bitcoin can come much lower. Bitcoin can go all the way down to this trend line. All the way down to this trend line. And still be trading inside of the bullish narrative of this bullish push, right? It's when you start closing candles below the bullish push that, yeah, it's not going to work. But you may be finding support here. And this is what I told a lot of people in the Discord, the CTM Discord, as well as my Discord. Don't look for buying opportunities until at least you get a wick thrown below these wicks. At least. Because there are stops there that need to be cleared out before price can move higher. So you did get an NFOP spike on Bitcoin. Not NFOP. I think I just created a whole new Fed thing. FOMC spike, but it wasn't massive. You did get below those wicks, right? You're not looking for bullish entries yet because you're trading below support on an hourly basis, and it's holding perfectly. So it's called resistance from down here. You need to get back above it. That level is 39,200. As long as you're closing hourlies below it, you can look for lower prices. And like I said, don't get scared because you can trade all the way back down to this 36,000, 36,600 and still remain bullish. When you have big ranges in price like this, price action tends to eventually go back and test it. That's a little bit more of an advanced type of trading style, but I mean, I'll put videos out about it later on down the road. The main thing is getting your support and resistance down pat. Once you know how to firmly trade support and resistance, then we'll start going over more really advanced stuff. Glad I sold my ETH. Can't wait on it. Hello. Never listened to you before. Good stuff. Thanks for publishing, brother. You are welcome, Peter Phillips, and welcome, my friend. Good afternoon, Heath, says the Prophet. Good afternoon, the Prophet. How about gold? Yeah, let's go back and look at gold again as we are getting our test, the test that we want on gold. So we got to see if it wants to hold. This is the level that I've been saying to watch for weeks. 1838 spot 1.7. I guess you could call it 1.8 since it's above 5. You just round up. This level here, as I wanted to see if this would push down into it and hold as support. A daily close above it identifies that it is currently holding as support. So you don't look to get long today or even possibly tomorrow because you're going to have a bunch of sideways price action. When you have big moves, generally the next day is going to be an inside day, as it's going to go back and test any inefficiencies in price, get all that stuff off the table, and then buyers or sellers can step back in the market and propel it in whichever direction it wants to go. But this is a very important level. So if you open and you push down below it again tomorrow and you close above it, that starts to look better for bullish entries, right? Maybe third day, push back below it, start to head higher. On the count, you take out a daily high, then you can look for retests and pushes out of the area because chances are price wants to move higher. That's going to be a very important level for the next couple days. Aussie CAD, bearish engulfing on the day, aka outside day, possible reversal. Depends on where he closes today. But that is an outside range candle. You took out the high and the low. Not only of this candle, but this candle, this candle, this candle, this candle, this candle. You took out a lot of candles ranges on this day. So what you want to see for continuation is you want to see tomorrow trade up. If you get a test of the opening price and you reject, that's a good spot to look for short side setups. If you get a daily closure tomorrow above this open at 93689, then you will be looking for bullish opportunities as it purged all or took out all the stops that it needed to take out for bullish continuation. Aussie is a risk on asset. And you can see that Aussie CAD's been getting destroyed. Aussie CAD's been getting destroyed because CAD has been absolutely phenomenally bullish because of oil. CAD is a massive oil producing country. So if oil's going up, CAD is generally going up. The loonie is going up. Today, USD is stronger than the CAD. You are testing 8-hour resistance right now. You are finding it. There it is. Big, massive range of price. So for the next few days, expect a lot of this to be retraced. Then, and only then, can you start looking for bullish opportunities. If you think it's going to continue, you get an hourly close below this, then you're looking lower probably. But this was a nice strong hourly close. So chances are you're going to see some continuation from that. But don't take any entries into resistance. Wait for that retest, if at least that candle right there. 4-hour bearish candle. Push back down into that. If you're bullish, you can look long. There's you a nice little swing low to throw a stop under for swing trades, looking for bullish continuation on USD CAD. But I wouldn't look for too much bullish continuation. Because if everything turns around and starts to go back to normal, the dollar is going to be in a fantastic spot for sellers to re-engage the asset. Yeah, Ergen. Because other people want tickers themselves. So you can't just come in here and start spamming a bunch of tickers. People will bounce you for that. I don't see anything on ship. USD maybe? Nothing. Are you talking about this thing? It's on the NASDAQ. Let's go look at it. This is a penny stock. You're trading at $1.30. There's no liquidity, I bet. None. There's your 5-minute candles. Nothing. Nobody's trading this, dude. Nobody. It's garbage. Leave it alone. Leave it alone. XRP. XRP is going to look exactly like Bitcoin and ETH. Huh? Alright. And I do have an appointment at 4 o'clock, so I will have to start wrapping this thing up here in a little bit. XRP it looks way worse than ETH and Bitcoin. Like, this was your bullish bounce off of this thing's going to get crushed. Here's your support to watch for now. 84519, you get a daily closure below that, you're going to lose. This daily support is next. If you lose that, you're going to be targeting this wick low down here at 65 cents. You need to start seeing some higher highs and higher lows on this asset, or you will be seeing lower lows and lower highs. How to use fib retracement tool and what is your settings? Alright, so let's use Bitcoin. Or screw it, let's just use this S&P 500. Look at that, guys. S&P 500 is moving back up, looking to close as a doji on the day. So if you were looking from this swing low and you were looking for places to short on retests from this swing high to this swing low, there is your Fibonacci retracement. So basically you draw from a high to a low in the direction that you want it to retest, as this is a retracement tool. So you're looking for a price retracement. You have already retraced above the 0.5 level. So my levels are the basic levels that you get on TradingView, the 236, 382, 0.5, which is not a Fibonacci. It's not a Fibonacci ratio. It's just the midpoint of a range. The 0.618 and the 0.786. So you can pause it now if you like, and those are my settings: 0 to 1, 236, 382, 0.5, 618, 786. If you just use today's range, you've already traded back above your 618. You have already taken out your bearish expansion candle on a 5-minute closing candle. I expect FX to start doing this as well. You have retraced every bit of that bearish momentum. Pound has not. Euro has not. This is still going. So you might get some continuation on the currencies, but I do expect support to come in on these assets. Euro USD, Pound USD, we'd be looking higher on these things. Gold, possibly. Can I do mana? Yeah, why not? Terrible on a 5-minute, no liquidity. Let's go look at it on the daily. It's doing the same thing XRP is. You are losing bullish. Yeah, these daily ranges are getting tiny. This one is an outside day, so I mean, but the range is so small. Like literally, it's tiny. You are losing all of your momentum. You definitely need to start seeing some higher highs and higher lows. First area you got to get above is this daily close right there. It's 73529. Daily close above. As long as you're closing daily candles below there, this is a short. Last area of support before you get this one is 65753. If you do not get a daily close above that level, people will short this, and they will be targeting for this bearish candle's closing price. You the man. Thank you, Cassidy. Euro Swiss. Let's go look at that. I haven't looked at that in a minute. Swissy was weak today. So a lot of these assets were strong versus the Swissy until obviously the news came out. Alright, so on the daily it's range bound, coming off of a pretty big expansion move to the downside. So you are trending lower. There are no real big inefficiencies in price that I can see. Yeah, this is probably going to get sold, unfortunately. Here is your 8-hour resistance. You got to get above that 1.09169. If you don't get an 8-hour closure above that, this is going to be resistance. All right, you need an 8-hour closure above that. You need to come back in and retest either this level or this level as support before you can look for bullish entries. If you are looking for shorts, just keep in mind that it is extremely extended to the downside. I mean, it's not extremely extended to the downside, but this has been one big massive pullback. I remember when this happened. I remember this day. I remember all of that like it was yesterday because I was watching this thing. I also remember the first bounce that it got back here because the daily ranges were getting so small. You got a bullish push, took out support to the downside, and I was keeping people in the CTM back then looking for this thing to explode out of here. because you were just losing momentum. You spent several days below resistance and you couldn't put in hardly any range at all. And then boom, short squeeze to the upside. A couple of days of consolidation, boom, to the upside. These thing trades very crazy, right? Choppy sideways for months, down, up. Choppy sideways for months, up. And now you're getting choppy to down. It's still bullish. Here are your moving averages. Let's see what they look like. As long as you're below the above the 200, you're not. You fell back below the 200, so it looks like you're losing bullish momentum. You have lost bullish momentum, rather, I should say. Here we go. Let's do this. RSI. You are trading underneath the bullish control zone. This is pulling back, so you're not looking for short side setups yet. Let your RSI get up to around the 50 marker. So basically, that 8-hour resistance is going to come into play first. And then this daily support, old daily support, maybe turns into resistance. If you get a daily close below that, this test, all that lines up. You can look for short side setups, continuation, targeting this wick low. You get a daily closure above 109.282. You're looking, or you're waiting. You're waiting to see what happens around this section of price. See if you can get a daily closure above that resistance at 9854, right? Because you are losing momentum, but the longer term trend is up. Looks like you could probably subjectively fit a trend line under there even. Well, there's a non-subjective trend line as I'm just using the lows. Low. You're coming into that. So I wouldn't look for any short side setups this close to that. Like I said, look for higher prices to short into. Or if you wanted to play it safe, you could wait until you get a break of that trend line maybe. Even sometimes that doesn't work. Breaks of trend lines are just bear traps in some cases. Apple, let's go look at it real quick. I know if I'm passing you up, I apologies. I'm just trying to rush out a few of these requests before I gotta bounce. Apple's trading sideways. It's not getting beat up like other tech was. See, this is the thing
too, as this monetary policy will affect Apple probably a little bit. Right now, all right, so you're looking for, you couldn't get lower than here. So this daily support down here was support. You can see you came back in for a retest of it and you got a nice bullish push out of the area, as well as taking out any daily closes that were bullish. This one right here, never mind these bearish candles that stick out above this bullish candle, as this is a gap. This is a stock, so it gaps. So essentially, this is a resistance test and the daily close below. This daily opened up here. It opened above resistance and then traded back below it. So these red candles are still resistance failures. All right. The only time it is not is if you get a push down into that area and then a daily close bullish. Then your resistance has been tested as support and you are looking for higher prices. You got that on this day here, right? You can see how every single day since treated that one candle as resistance. Could not close above, could not close above, could not close above. And you got bearish momentum to the downside. Next day, bullish push right up into that level. Opened above the level, came in for a retest. Booyah shakalaka. That's your entry, my friend. Right? That's what we look for as price action traders. I know that if you're new to the channel, that's going to sound like I'm doing this in hindsight, but I do this every single day, all day long, and have been for years. That is your entry, all right? It is still bullish. You are testing this daily range. You do not want to buy it today, as you have already came into the 618, and you are seeing people buy it up right now. So what you got to wait for is you got to wait on another resistance test. Perfect, Heath. Where's that at? I will tell you right now. Boom, right there. 132.04. Wait for price to push up into that level. Let price treat that level as resistance, and then look for a support test. Once we get these price action, once we get these daily candles, then I will, if you remind me, I will come back in here and I will find you a level to buy on a retest. Probably will be anywhere between 129 and 131. Obviously, I can't give you a price now because there's no candle here to look at. But if that happens, that's what we will be looking for. We will be looking because you are getting bullish momentum. You are trading back above your 50 on your RSI. Where are your moving averages? You are trading firmly above all your moving averages. You are now starting to catch bullish momentum. Apple is going to be looking for higher prices. AMC, what resistance would AMC have to break to turn bullish from where I'm short? AMC needs to get above where I'm short before you can say it's bullish. Let me go into an hourly chart. This is where I got short yesterday. This white line right here was my bullish target yesterday. In the morning, first thing in the morning, I took profits once that bullish line was tested again. All right, exited my position. This is an hourly chart, not a daily. You got a test of this level, then another push higher, and then boom. This right here is what prompted me to look for a test of my target. I got that on this push up. That is my short entry at $60.30. Stop loss is directly above that wick high. You can see that we traded sideways, forming a ascending wedge on a 5-minute chart yesterday, right here. This stuff right here, this was your ascending wedge, aka bear flag. This morning you got open down here, boom. You're seeing bearish price action come out of this area. So in order for you to look for bullish entries, you need to get above that. Until you do, this thing is going to be shorted. This is my opinion on AMC. You had a short squeeze. You see this bearish price action down here below this trend line? One morning on a live stream, we were looking for this. Once this happened, I basically said price was gapping above resistance. I said let price trade back down and find support. This is your area of finding support. Once that happened, that is your bullish entry. This was a bear trap. People were stuck short. All right. Now, this push up here got them stuck short. You came in for a retest, midpoint of this daily candle. Roughly midpoint of this daily candle's range. Let's throw the fib on it to prove it. Right there, 618 test. That's your buying entry. Boom. See ya later, alligator. So this was your short squeeze. All of this. Since that short squeeze, what have you done? You have traded sideways to down, put in this low. Yes, people bought this up because this is a retest of this bearish candle. Let's throw a wick, or let's throw a fib on this. So you got above the 786 yesterday. We were targeting bullish wicks yesterday. You got above them. Sellers entered the market. Can this hold support? Yes, it can. Right there is the level to look for support, 47.93. All right. If you're still bullish on this asset, let price trade down to there. And make sure that level holds as support on at least a 4-hour closing basis. You do not want to see closures below that. If you get that, you're going to be testing the bearish close of this daily candle at 42.83, and you're looking like the squeeze is over at that point. Next area of support, 31.81. So as long as this level holds support, the bulls may be able to get this thing jacked back up again. But this level is going to be tested long before that happens, I'm assuming. I do not have a crystal ball. This is not a big bearish day. We essentially came in and tested this bullish candle's opening price. So, and it's holding as support right now. Right? So this could be it too. So to be on the safe side, you want to see it get back up into around $60. But like I said, your implied volatility is so expensive on this. If you're buying calls, out of the money calls, you're probably going to lose money. I mean, it's cheaper to trade the shares almost than it is to buy out of the money calls on this thing. When you get massive explosions of price like that, your implied volatility gets kicked up so much, the premium on those calls and puts go off the charts expensive. So just by this thing trading sideways like this is enough to crush your implied volatility, making your calls get more worthless and worthless every single day that passes. This is standard price action. You are trading in a bullish flag though, right? Kind of, sort of. So with all that being said, I'm not a pattern trader, but if you get rid of all these lines and do something like this, and then do something like this, what does that look like? Yep, kind of looks like a bull flag to me. So to be on the safe side, wait for a breakout above that, right? And then buy shares though, not premium. Premium is terribly expensive on something that's this cheap. You can buy shares. You don't need to buy a lot, but I'm assuming that the short squeeze may be over. We shall see, right? I'm not calling it the top yet. Absolutely not. This is a a bull flag. You can absolutely get bullish price action out of here. And to be honest with you, a measured move would put you roughly around $250. That's if you get a measured move. Let's measure that for real. Because I was on log, so apologies. You will not be seeing those prices. Something like this. Let's just call it there. Let's just call it there. So roughly $115, maybe. Right? That's if you get a measured move out of this bull flag. You can look for roughly $100. So it's definitely bullish. It is not bearish. I took a short side entry yesterday just because I felt as if though you can see this wick right here. This was the target. This wick high. That wick was the target. And you traded up into this area here. So I like that as well. That's why I got short. And the trade worked out today. So we will see where it goes from here. Pound NZD. Great British Pound. A New Zealand Dollar. Alright guys, this will be the last one unfortunately because I have to bounce. My meeting is not here at the house, so I have to get on the go. It's at 4 o'clock. You're trading above daily resistance, which is nice. Alright, you're green on the day, which is also nice. So this was resistance until you got a break above. Actually, it was this one over here. Break above, tested it. So far it's holding. You are trading above this old high over here, this resistance high. So yeah, you're trading above it. Can it keep going higher? Yeah, it can. But the thing is you have taken out all the stops above there. And if you watch my crosshair, that's taken out all these stops too. So this could just be a run on liquidity for short side sellers. For sellers, because what's above this stuff up here? Buy orders, higher buyers. What does big investment banks and firms need in order to put in a short position? They need a lot of buyers, and they would love to have buyers at a higher price as they are looking to exit their position at a higher price or take a short position at a higher price, because either way the logic is sound. So basically you got to give this time to find support again. You cannot just blindly buy into this. This could be a sell in the next couple days coming, right? So it's bullish for now. On a daily closing basis, you're trading above 50. Let's see where your moving averages are. You're above all your moving averages. So right now you're starting to get a nice caress of those averages. So wait for a pullback, probably roughly to around 196, 154, and then possibly look for bullish entries for higher prices against the pound New Zealand dollar. So before I go, I can't do it. This is the different computer. So I'll just say it. Before I go, please, I just want to say thank you so much to all my Patreons and members. You guys rock. Thank you so much for your support. It means everything to me. I will get one on this computer so I can actually show the names, as that is the proper shout out that you guys deserve. So I will work on that. Thank you so much for being here. If you're new, subscribe. You're going to learn some stuff you probably haven't seen anywhere else. That's a promise, because this is the way I trade. It is a simple way to do it, and it keeps you on the right side of the market a lot of the time. So thank you for being here. We will talk to you guys bright and early, first thing in the morning, as it will be Thursday, and I do a bright and early live stream on Thursday morning at 5:30 a.m. Eastern Standard Time ahead of the New York Open. We will look for some day trades in the FX markets and possibly a few crypto markets as well. See if we can find something to look forward to, looking for entries tomorrow. We will talk to you then, guys. Thanks so much. Oh yeah, trade safe, trade smart, happy trading.